Hey everybody, welcome back to the channel. Robert Doyle here, back with your crypto update. Markus Infanger was at Paris Blockchain Week, and he was talking about the growth of Ripple, how many validators they're running, and what's going on with the company. I thought this was really good, so I wanted to show you a clip and go through it with you. He's been working for Ripple for 4 years and 3 months. He was a senior director, then global head of markets, and now he's the VP of Ripple X Growth. He had some time at Credit Suisse, some time at ANZ, head of the treasury portfolio salesperson. He's got some really good ties here, as well as working at Goldman Sachs in his early days, 1999 to 2002. Man, I was in high school back then. All right, this is the clip. So let's go through it. We'll listen to it. And if there's a place that I'll pause and talk and give you my 2 cents on what he's saying, let's get into it, okay?
And Ripple X Growth, because there's a lot there to unpack.
I'd love to do that. Thank you all for coming. Great to be here in this fantastic city on this great event. I'm Markus Infanger. I'm the VP, not the president, of Ripple X Growth. And Ripple X Growth basically takes care of partnerships and developer growth around the XRP Ledger. For me personally, I've been with Ripple for 4 years now, a bit over 4 years. I was in banking, financial industry all my life. I started work when I was 16. You can consider that child labor, but that's how they do things in Switzerland. And then
they do things like that in California too. I had to wash cars at 16. It's not just Switzerland, okay?
Stayed all my career pretty much through in banking for an exchange side. And then at the end of 2019, I changed to Ripple. First, I was part of the markets team, which really focused on crypto liquidity and empowering cross-border solutions with liquidity of digital assets. And now I've morphed into a full tech role on the Ripple X side, where we really focus on the work around the protocol together with an open source community. What I'd love to quickly do as well to set the record straight on terminologies as they happen to be conflated around Ripple, XRP Ledger, just to decompose those.
He's going to break down what the differences are, right? Ripple is just the company who built their banking software on top of the XRP Ledger. They do have something called ODL, on-demand liquidity, where Ripple has bought back over 8 billion XRP or $8 billion worth of XRP off the market. I can't remember which one it was. I apologize on that. But they use that in the ODL so that if banks or anybody wants to send a huge payment, they don't have to hold XRP themselves. They could go through ODL and make that payment, okay?
And put them in order. Ripple is essentially a crypto blockchain solution provider. And you can think of it like a Silicon Valley tech firm, TechFin, more than fintech firm. That's got 800 people working in 15 different offices, focused on crypto solutions with enterprises in large. Then there's the XRP Ledger, which is one of the oldest and most battle-tested crypto protocol. It's open source. It's powered by a community of global developers. There's 35 unique validators that help validate transactions, secure the system. And Ripple only operates one. There were a few more, and so over time we reduced those, and now we're only operating one. So it's an open source blockchain. It's one of the oldest blockchains. It was built originally for payments and really has been battle tested around features of security. It's got
So check it out. Bitcoin came out 2008, right? 2009 area. They understood the failures, not the failures. Proof of work is very hard, especially in the enterprise setting, right? You have all of these Fortune 500 companies and all these banks that are trying to do the goals, right? The climate goals. They're never going to use Bitcoin, right? Because there's no AML, anti-money laundering. There's no KYC. And there's another one, terroristic, to make sure that the money didn't come from a terrorist or to support a terrorist. So all of those things are very important for global payments between banks. And they have to have all of those checks.
Of native built features and so forth. And then there's XRP, which is the native digital asset on the blockchain. And what people often hear as well is RippleNet. And so RippleNet is a blockchain-inspired payments network that Ripple launched a couple of years ago, found product market fit, working with institutions, settling cross-border payments in an instant, using a crypto asset in the form of XRP as a bridge currency across distance.
Awesome. Thanks for that.
Sorry for the long monologue.
No, don't worry. That's why I'm interviewing you. Just for a little bit of context, I work at The Block, which is a information services in the digital assets space. So you may know us for our news team, but also have a research team and a data team, and also a research consulting and services. But Markus, you've been in the space for a long time, clearly, but so has asset tokenization as a theme. And it's also something that's taken on different meanings for different market participants. So DeFi protocols may think of it as a yield opportunity or a way of structuring lending markets around different borrowers. Banks may think of it as tokenizing something they hold on their balance sheet. The buy side may look at the opportunity differently. So what do you see the use cases currently for the RWA market?
Yeah, so when we talk about real-world asset tokenization, that's exactly what we mean, right? Basically bringing or representing assets that we know in the real world, and it can span from securities, commodities,
stocks, bonds, derivatives that can be tokenized: gold, silver, palladium, nickel, copper, bronze, all of this stuff, steel, oil, carbon, natural gas, energy, all of it's going to be tokenized, guys, and live on the blockchain, okay? All of it, trust me. That's how value is going to be able to move at the speed of light. If it's not hooked up to a blockchain and it's not interoperable, it's basically a sideload system, right? And that's why they build things like the XRPL, like the XLM, Stellar blockchain, right? Similar technology, and XDC, right? XDC is crucial for smart contracts. It's basically a fork of Ethereum without all the dumb fees, right? That's what XDC is. And that is what R3 Corda, XDC, XRP, that is what all the value is going to go through.
Physical art or currencies onto the blockchain. So representing these tokens.
Or currencies. So imagine every currency on the planet, right? Every country has their own, or a lot of countries use euros or pounds or whatever it is, or dollars. But imagine all of these different currencies from all these different nations. And all of those currencies are going to be paired to all the other currencies. I think there's like 180 total currencies or different things that can be paired. That's 33,000 different pairs that will be added to something like the XRP Ledger. So that can move value as well. It's incredible what this technology is and how important it is to our future, guys.
On the blockchain, essentially. And so maybe I start with, so why are people or businesses interested in this? And so I would say the blockchain representation of these tokenized assets solves essentially for three key pain points. One is inefficiency, the other one is inaccessibility, and the third one is illiquidity. And they're somewhat intertwined, but I'm just going to give some more color on.
Okay, so right now what we're seeing around the world, right? This is March 22nd, 2023. We're seeing a liquidity crisis. There's not enough money in the system. Banks have let out a lot of the stuff that's been deposited by people. Banks can go ahead and take 9 out of the $10 that you put into your checking account or your savings account, and then they can go ahead and use that money to go get more money, and then they invest it into it can be some really shady things, okay? And being able to have a ledger where you can have instant payment and instant settlement, you can also get rid of Nostro Vostro accounts. So this is really important for banks right now, especially right now because of the liquidity crisis. And we talk about all of this in my Sensei chats in the Crypto Narratives community.
Each one of them to start with. And so the opportunity really is here. If you look at how our existing financial system or system around real-world asset is constructed, it's basically been born out of different patches in different locations. And so it introduced a lot of friction. And if you look at just doing a guaranteed bond issuance takes anywhere between 45 and 90 days or something. And so all the different bits and pieces in the life cycle of financial assets take days, if not weeks. And through the introduction of blockchain, they can not only be basically fulfilled instantly in some cases, like payments, like Ripple is demonstrating since years, but also in a matter of hours for more complicated aspects like issuance, etc. And so the speed element is one part of the inefficiency. The other part is really around cost, right? The networks have been built in different patches. They don't really interoperate. There's no broad standards. There's a lot of intermediaries, a lot of middlemen that help facilitate all these international financial transactions, and each of them take a cut. And through the introduction of blockchain technology and representing different forms of assets on the blockchain technology through broader standards, through a lot of interoperability that's being built, these costs can be heavily reduced.
Banks can save up to 60%. So banks can save like 30% just using RippleNet, but if they decide to start using ODL for cross-border payments, they can save up to 60% per transaction. And if you're a bank and you're low on liquidity, you need that money. And so being able to source ODL and send payments instantly and receive payments instantly, that will create a huge savings for the bank and allow them to offer their customers 365 24/7 payments. And that is what people want. They want to be able to send cheap payments to family, to friends, remittances, whatever it is, people should have the ability to not get screwed over 15, 20, 25% in some cases. In places like Africa, in Brazil, some of these places charge 25% to move money. Out of $100, you're losing $25. That is insane. This all can take place pennies on the dollar, if that, and really Ripple is creating a huge use case in the banking system, and it's much needed. Let's finish this off and we'll end today.
Second point is inaccessibility. So basically, you may have heard 25% of the world population is not economically viable to access a bank account even.
True.
And so through the
25% of Americans actually don't have either a bank account or they don't have proper, like they can't go get loans, they can't get a home loan, a student loan, anything to help them out, a credit card. So there's a lot of people that are underbanked, not only in America, but all over the world. Think of places like Africa and some places in Asia where people just have a cell phone, but they don't have access to maybe the internet. And that's where like something like Starlink comes in and Mosher Loop and all these other things. But that's another video, that's another day.
Tokenization of certain assets or certain instruments, fractionalization can be introduced, and so the barrier to entry can be much lower and therefore can be accessible to demographies that just stay out right now and are stuck in a cash economy and just kept poor by the design of the system. And the third one is around illiquidity. And so basically, if you think about the biggest real world asset classes, real estate really stands out. And that alone is, I think, 200 trillion.
320 trillion is how much the global real estate is. It's okay, man. I spent all day researching this stuff, so it's okay he doesn't know the exact number, but it's like 320 to 326, 28 trillion dollars globally real estate, which will all be tokenized and put on a ledger. What ledger will it be? I don't know, but it needs to be interoperable. It has to be battle tested, like he said before. Only so many of those that are ISO compliant that are going to be able to do things like this. Investigate, research, understand what you hold, and then you will truly get this whole picture once you really start understanding all these really good things that are happening, okay?
Or more. And I think the total size of all the real world assets is in 300 or more trillion a year, anywhere between 250 and 400 trillion or something. So a large part of the real world assets are really, sort of semi-liquid or even illiquid if you think about private markets, etc. And so blockchains, through the enhancement of accessibility and so forth, can really help foster liquidity, and hence why institutions,
why institutions are adopting this technology. I thought that was great. There's a lot of really cool information. I added my 2 cents. I hope that was valuable to you. If you guys found value in this video, please like and subscribe and share with somebody you know. Help me grow the channel, baby. I can't do it without you. I need it. I'm just kidding. Thank you so much. Have a good day. Bye.